Hello friends, this is Gaurav Goyal from Lamoksh Investments. Welcome to the December newsletter of Paisa Vasool. We start with the world this month as we saw it from our eyes. In US there were bullish overtones all over, despite concerns emanating from COVID and Omicron. Dow Jones Industrial Average was up 5.3%, S&P 500 was up 4.3%, and broader Russell 2000 by 2.1%. Nasdaq was flat. December also marked a glorious end to the year with Dow Jones recording 18% gains, Nasdaq 21%, and S&P 500 was up by 27%. Russell 2000 was an underperformer and gave 13.69% returns in comparison. Energy and real estate sectors were the best performing sectors. Both of them rose by more than 40%, whereas technology and financials gained by more than 30%. Corporate US performance was exceptional. Year-on-year earnings growth for 2021 is estimated to be around 45%. More than 80% companies in S&P 500 have beaten consensus expectations despite challenges from supply chain, labor, inflation, and of course COVID. The markets were supported by highly accommodative fiscal and monetary policies right throughout the year. In December, Fed announced tapering by $30 billion a month and indicated 3 interest rate hikes in 22 and 3 in 23. However, there was minimum disruptions. In fact, markets welcomed as the uncertainty was removed and announcements were very well communicated. Here's a look at the US indices over a period of 1 month, 3 month, and 1 year time horizons. The global GDP has surpassed its pre-pandemic level in 2021 and completed the transition from recovery to expansion. This was aided by strong policy support, effective vaccination, and resumption of economic activities. However, China surprised negatively right throughout the year. In December, Chinese banks lowered bank borrowing rates for the first time in 20 months. There seems to be clear divergence in monetary policy in US and China. While US looking to raise interest rates, China is looking to bring down the rates. In UK, inflation has soared to its highest level in decade, hitting 5.1% in November. Bank of England surprisingly increased the benchmark rate from 0.1 to 0.25%. Here we also look at various indices, countries, and their performance in the year 2021. Asian indices. Nikkei in Japan was up by 4.91%. Kospi was up 3.63%, and Singapore Straits Time Index rose by 9.84% in 2021. Hang Seng Index out of Hong Kong and representing China was down 14%. European indices led by CAC were all up between 15 to 30%, CAC registering almost 29% gains in 21. So if we look at commodities in the year 2021, we'll realize that most of the commodities did fairly well. Brent was up 50%, ethanol was up 73%, gold and silver, however, underperformed and both were down. Lithium, which is a critical component of batteries, was up 486%. Copper, another metal indicator, was up 27%, while aluminum was up 42%. Soybean on soft commodity side was up 42%. If we look at the currencies, US dollar dominated in a big way. Euro USD was Euro underperformed by 7%. Great British Pound was down 1.5%. Aussie dollar was down by 6%. Bitcoin, if we have to treat it as a currency, then it went through a roller coaster period in 2021 expectedly, and it was up 2% for the year, even though it was down 16% in the month of December. Turkish Lira with all the chaos that's happening in Turkey, was down 79%, which is a very significant number. Indian rupee was down by 1.96% and actually did fairly well vis-a-vis the other currencies. So in India, there were COVID blues. We witnessed a second wave in the month of April, May, June, and of course, third wave because of Omicron towards the fag end of the year. Despite that, Nifty recorded a fabulous year. Nifty small cap index was up 50% in the year, mid cap was up 46%, and Nifty 50 did well to gain 24% in 2021. Nifty Bank was the underperformed and gained only 13.49% in 21. Among the sectors, metals, IT, realty, and commodity stole the limelight, while private banks, FMCG, and pharma were left behind. Foreign portfolio investors continued selling in the overvalued Indian stocks. Domestic Indian institutions and retail clients did their best to stem the rot. COVID concerns resurfaced towards the fag end of December. There were night curfews and partial restrictions imposed by various states in December. Consumer price index was at 4.91%, well within RBI's comfort range. However, wholesale price index was in double digit and a cause of concern. Indian corporates did an excellent job post-COVID. Earnings are expected to grow by 35% in FY 21-22. Balance sheets of Indian corporates are lighter with lesser debt on books, and demand in Indian markets looks quite robust. Here's a chart which shows Indian benchmark indices performing over a period of 1 month, 3 months, 6 months, and 1 year. So as you can see, metals, IT, and realty outshined in 2021, while FMCG really performed quite poorly along with pharma. So if we try to take a peek into the future, then we realize that Omicron is a clear and present danger to global economies. We all know that it is extremely infectious. However, as we have come to know of late, it is not lethal and hospitalization rate is quite low. However, we need to remain cautious and vigilant. It won't be a bad idea to prepare our portfolios for lockdowns and short term. Reshuffle equity portfolios and sectors that excel in chaos. The last 2 years could be a good guide for what needs to be done going forward. If Omicron replaces Delta as the dominant strain, it can very well end the pandemic. We forecast pandemic becoming endemic in 2022. We also think that money making won't be easy in this year. Periods of easy returns are over. However, more than the indices, it would be the individual stocks and sectors which will provide smart opportunities. We see value in sectors like financial, healthcare, IT, and exchange ecosystems. It may be possible that financial may struggle in short period of time, not necessarily, but should recover with vengeance, having underperformed in last 2 years. We remain overall bullish on financials. Inflation worries will remain buoyant throughout 2022, not just in India but globally. However, we see it easing in the second half of the year. Supply chain constraints will ease out in coming months, and excess liquidity in markets will slowly get absorbed, though it will never be deficient. Corporate earnings will continue to flourish in 2022. This will provide valuation comfort to expensive Indian markets at this point of time. We expect EPS growth of 35% in 21-22, 18 to 20% growth in 22-23, and around 15% in 23-24 for Indian corporates. GDP will grow at a handsome rate and beat expectations. We also see FIs returning back to Indian markets with the bank later in the year. DIs will remain supportive. Retail participation will slow down but not derail. The upcoming state elections, which are unlikely to destabilize Indian political system in any way, and government is likely to remain proactive and progressive on economic front. As you all know, we run 4 portfolio strategies on small case. Our website is lamokshinvestments.smallcase.com. Sun is at the core of our portfolio strategies. It consists of high quality companies which have high standards of corporate governance, sustainable high growth, low debt in the balance sheet, and are consistent high performers. Here's a chart that exhibits the performance of Sun vis-a-vis Nifty 100. As you can see from the chart, Sun has consistently outperformed Nifty 100. Second small case that we have is Earth. It's a market cap agnostic portfolio aimed at generating superior returns with high risk. Emphasis has been placed on identifying companies with quality management, strong fundamentals, conducive environment, potential for operating leverage, and lower debt. Here's a chart which represents Earth performance in last 6 months since its launch on June 6th vis-a-vis Nifty Small Cap 100, which is its comparative benchmark, and also against Nifty 100. As you can see, Nifty Small Cap and Nifty 100 has underperformed Earth right across the tenor that we are talking of. Moon is enigmatic and vibrant. It's a satellite portfolio of quality stocks which aims to generate high returns with higher degree of risk, and time frame that we look at is long. It consists largely of mid and small cap stocks with regular rebalancing of the portfolio based on the performance. It targets and macro economic environment. It also incorporates turnaround stories, plays momentum, corporate restructuring, and investment in cyclical sectors. Here's the chart of Moon with vis-a-vis Nifty Small Cap 100 and Nifty 100. As you can see from the chart, Moon has done exceptionally well since its launch on June 6, 2021. Galaxy is a collection of super stocks which is aimed at achieving astronomical heights with a classy set of companies and is backed by strong fundamentals and high standards of corporate governance. Galaxy was launched on 14 June and the chart clearly shows good performance vis-a-vis its benchmark Nifty Multicap. So we aim for trust in our relationships with our clients, which is of paramount importance to us. Affordable pricing, unbiased advisory, transparency, and personalized attention are our core commitment offerings. We believe in long-term philosophy, and which is underlined in this quote from Warren Buffett: somebody's sitting in the shade today because someone planted a tree long time ago. As for me, I have 2 decades of domestic and international experience in the financial sector. I've worked with some of the large institutions in the past in the private banking field and attained postgraduate degree in international business from IFT New Delhi in the year 2000. You can reach us via Gmail, YouTube channel, Twitter, LinkedIn, and Telegram. The links are provided here. Hope you liked the December edition. Your feedback is most welcome. It will help us improve further and provide you more enriching content. Thank you so much.